Hello, everyone, and welcome to another episode of Coffee with Carl. I am your host, Carl Zoellner, here with Anderson Business Advisors. And today I want to talk a little bit about the franchise tax in California. There are several different options that are out there. I know Clint just put out a video recently as well. And just kind of hit on a couple of the highlights here. California is one of those states that's incredibly difficult to work with from a doing business perspective, especially if you're a California resident, because basically your residency in California is the franchise board's position that any entity you own, or I should say almost any entity you own nowadays, should be subject to the California Franchise Board. There, in the last year, was a case that came up with a limited partnership in California where it's referred to now as a disregarded limited partnership, which wasn't really a recognized thing for many years. But basically, the same taxpayer for the limited partner as the general partner in a limited partnership, you can now have what's referred to as a disregarded limited partnership. Used to be that partnership would file a return 1065, just as any other partnership would. From the federal government side, they said, listen, if it's the same taxpayer, then don't worry about it. We'll treat it like a disregarded entity. I say that to say this. That type of entity came in front of the franchise board in California, and the ultimate decision for that entity was that it did not or was not subject to California franchise tax at all. So it's really interesting. Now, like I said, this happened about a year ago. Personally, I'm still skeptical. Usually when these type of things pop up in California, the franchise board is relatively quick to close that loophole. So I'm sort of cautiously optimistic that this is a strategy that can be used, or if it is used, it should be used understanding that things may change in the future, as they often do. Another common question that usually comes along with these when we start talking about them is, do disregarded LLCs work the same way? And they do not. So in California, a disregarded LLC in the state of California would still be subject to the California Franchise Board. So it's important to note that distinction. Like I said, from my opinion or from my perspective, I still look at it as likely that California closes that gap and the entity would still be subject to franchise tax. But that's something that's speculative on my part, so that's something we'll have to see. It's one of those items that's out there, but it's worth mentioning. The other piece that is interesting, or that you look at to avoid California franchise tax, is using a trust to hold that property in California. Trusts are not subject to the franchise tax. However, most trusts do not provide asset protection. So you could look at asset protection trusts in that regard. The other, or sort of the nature of them, causes me questions in California as well, simply because California doesn't recognize asset protection trusts, and there's just not a lot of case law on it. So they may actually hold up very well. I haven't seen enough to say that would be my preferred route. So if you came to me and said, hey, Carl, I want to set up a Delaware statutory trust in California, I would say, great. You're more than welcome to do that. Here's my understanding of them, my concerns. If that's the route you want to go. Unfortunately, the company I work for, we don't do Delaware statutory trusts. I know we're looking at Wyoming and a couple of different options in Wyoming that may work, but I can always refer you out. So like I said, just a quick video today. I want to talk a little bit about the California franchise tax, some possible entity options. Like I said, to me right now, I like our strategy that we've had pretty consistently across the years. I don't see a reason to rush into a change. However, you may see it come up more because the longer that a disregarded limited partnership is sort of stays at the front of mind as not subject to franchise tax, the more popular it will become along the way. So until next time, please continue taking advantage of all of our free content out there. Love to see anybody who is a client at one of our classes, or also, of course, chat with us online. On the other side of that, if you're not yet a client, I'd encourage you to have your free consultation, and we look forward to working with you. So until next time, thanks for joining me for this episode of Coffee with Carl.